Okay, good afternoon guys and welcome to another session of Financial Accounting together with your Prof. Zeus. Okay, so for this afternoon, we'll be discussing the last portion of the balance sheet, that is the shareholders equity. Okay, as you know, when you speak of shareholders equity, this is the residual interest, no? Residual interest of the shareholders. Okay, so residual interest of shareholders. From the net assets of the corporation. Okay. So speak of shareholders equity, it represents the residual interest. Kung saan mong residual interest, ang ibig sabihin, ito yung latak, no? Naglatak na para sa mga may-ari ng isang corporation. Okay? Okay, these are the claims of the shareholders from the net assets of the corporation. In the event of liquidation, when they sell the properties, whatever is left will be distributed to the shareholders. Okay? Now, shareholders equity actually pertains to what? The corporate setup. It actually pertains to the corporate setup or corporation. Okay? So what is a corporation? We speak of corporation, it is actually a juridical entity. It's a juridical entity created by operational law. Okay, so dahil sa batas, ang isang korporasyon ay nagkakaroon ng buhay. Okay, dahil siya ay juridical entity na, the corporation may acquire assets, may dispose of assets, no? Yun, those are some of the rights and privileges of the corporate setup. Okay, once they are already registered with the SEC. So how do you register a corporation with the SEC? First and foremost, the company will have to go online, no, for the application with SEC. There's an online application with SEC, and part of it is, of course, to reserve the name of the corporation. Now, once the name is cleared and reserved by the SEC for you, okay, what do you do is to fill out the information, okay, that's needed or required by the SEC online, okay, for them to be able to create the articles of incorporation. So all the information that you provide or that you will provide will be part of the articles of incorporation, okay? So what are those information na nakalagay sa articles of incorporation? Of course, number one, the name of the entity. Number two is the address, office address of the entity. Number three would be the purpose, the purposes, no? Why you have created, purposes of the entity, why you have created that entity, okay, and what's your motivation. Then what else? Of course, the incorporators. Incorporators are they are the first owners of the corporation, of course. And then number five, of course, the number of shares authorized for issuance. Now, with regard to this one, it will also be part of the information, okay? The par value of the shares, the number of shares, authorized shares. Okay. Now what else? Now these basically are some of the things that you will find in the articles of incorporation of an entity. Okay? So ito yung mga nakalagay sa articles. Now, the ownership of a corporation is evidenced by what we call shares of stock. Shares of stock, or yung certificate, no? Stock certificate, or stock certificate. So if you are an owner of a corporation, then you should have your stock certificate. Okay, the stock certificate should be under your name. Okay? Otherwise, you don't have any right to claim to the to claim for anything from the corporation. Okay, so shares of stock or stock certificate. Now, with regard to this one, okay, there are two types of shares that can be issued by the company. Number one, you have the preference share. And number two, you have the common shares. No? So when you speak of preference shares, now these are shareholders with certain preferential rights. Okay? Okay, they hold certain preferential rights, say for example, in terms of dividends. So dividends, the dividends of the preferential holders will have to be paid or settled first before the dividends to the common shareholders will be able to get okay? Dividends are in the event of liquidation, okay, then you have to settle first the return of capital by the preferential holders, okay? Now, common shares are actually, these are the owners, so the true owners of the corporation. And when you are a common shareholder, okay, there are certain rights and privileges granted to you that's not granted to the preference share. Number one, of course, is the right to vote and be voted. Vote and be voted. So, meron kang karapatan na ma-elect. Because you're a common shareholder, you are one of the owners of the company, so you have the right to be voted as members of the board of directors. And then eventually, if you will get the numbers, then you become the president of the company. And the right to vote. So you can participate in, corporate affairs like voting of shareholders, or voting of board of directors. And you can participate, okay, because you are a common shareholder. Okay. Now what else? Now with regard to preference shares, now there are different types of preference shares. Number one, we have what we call the cumulative versus the non-cumulative. So when you speak of cumulative preference shares, they have the right to receive their yearly dividends. Okay, so say for example, 2019, the board of directors declared dividends. Then the preference shareholders will be the first one to be given the dividends. Okay. Now, what if 2020 there was no declaration of dividends? So the cumulative preference shareholders will not get anything. But 2021, if there is a dividend declared, then the preference shareholders of the cumulative owners will have to first get the 2020 dividends, and then 2021. So it accumulates. So the dividend accumulates actually. And for non-cumulative, only the years when the board of directors declare dividends is the time that they have the chance to participate in terms of dividend. Okay. And then we also have what we call participative versus non-participative. Okay. So what is meant by participative? Now, this actually refers to the preference shareholders' ability to share or participate in the net income to be distributed to the common share. Now remember, when you speak of preference share, they have this preferential dividend rate. For example, 6% preference share, meaning in the event of a declaration of dividend, then they will have to get 6%. Okay. Now, if the preference share is participative, then they can still get a share from the dividends that's supposed to be for common. So they participate in sharing of the dividend. Now, non-participative, they can only participate up to the rate of preferential dividend. Okay, so essentially those are the time convertible and non-convertible preference share, meaning the shareholder can convert the preference share to common shares. Okay, as against the non-convertible shares that you stay as preference share shareholder throughout your life, in the organization. Okay. Now, in terms of the shareholder articles, so these are some of the things that you have to understand. We have what we call the authorized. When you say authorized capital stock, this is actually the one that's in the articles of incorporation. This represents the total number of shares of stock that is authorized for the corporation to issue to shareholders. So, for example, 10 million common shares. That is the authorized capital stock, and this is approved by SEC. Okay, and then we also have what we call issue. So, speak of issued shares. These are shares of stock that has been issued to shareholders, and they are still in the hands of the shareholders. Okay, and then we also have what we call treasury shares. When you speak of treasury shares, they are shares of stock that were previously issued by the corporation but are being reacquired, okay, by the corporation for whatever purpose they may have. So these are some of the terms that you have to understand in the study of corporation. And thank you very much. Sandali lang. Bro tayo. Asan na yung eraser? Pakita mo, G. So, hello, Jen.
Ay, ito po, sir.
Okay, so what are the items that you will find in the shareholders' equity? So what are the items that you will find in the shareholders' equity? Okay. Okay, number one, you have your contributed capital. When you speak of contributed capital, these are actually the actual contributions of the shareholders. Okay? So this is actually comprised of the share capital, and the share capital is actually this is the par value of the shares multiplied by the number of shares issued. Okay, and then we also have what we call the share premium. The share premium actually represents what? It represents the excess, okay? Excess of the par value. So say for example, the par value. What's par value? Par value represents the value of one share in the company stock, no? So say for example, the company has a par value of 10 pesos or 100 pesos. That is the value of one share. Now, can the company issue the shares at a price more than 10 pesos? Answer is yes, no? And the excess, that would go to the share premium. Okay? Yun naman ang share premium natin. Okay? What else? We have accumulated OCI. If you would recall, dun sa ating financial accounting part 1 and part 2, you encountered some items of other comprehensive income. Now, those items are, rolled up or accumulated in the shareholders' equity as part of this one, accumulated OCI. Now, what are some examples of this? If you recall the OCI, the investment, no? So net gain or loss in terms of what? In AFS, no? This is with regard to the increase or decrease in the market value of the AFS. Now, what else? In the property and equipment, we also have what we call the revaluation surplus. Now, in your other accounting subjects in advance, you will encounter some other items that are included in the accumulated OCI. But for now, I'd just like to deal with these two. Okay. So as I said, when say net gain or loss from in AFS, remember in available for sale securities, they are also marked to market. No? So mark to market meaning at the end of the reporting period, you have to get the market value of the shares and compare that with the carrying value of the shares in the books. No? So if the shares have increased in value, then you have a net gain, no, in the AFS. Okay. Now, revaluation surplus naman, ito naman yung sa property and equipment, no, wherein the company opted to use the revaluation model. So they called in an independent appraiser to revalue, to determine the value of the asset. Okay. So the excess of the sound value, the replacement cost of the asset against the carrying value, that is what we call the revaluation surplus. Now remember what we did for the revaluation, diba? We depreciated the asset, and then in the depreciation consists of two parts. No? Number one is the depreciation on the cost, meaning the original carrying value of the asset, and the number two is the depreciation on the revaluation surplus. Remember that the revaluation surplus can be realized by the company in two ways. Number one, they sell the asset, they realize the revaluation surplus. Number two is when they use the asset for operations, then gradually they are able to realize portion of the gain of the revaluation, no, through usage of the asset. Okay, so yun. And then we also have what we call the accumulated profit, or dati tawag natin dito sa retained earnings, no? So what is a retained earnings? So let's think of retained earnings. So this represents the gains, no, income and losses of the company from its operation from the beginning of time. So say for example, the company has operated for 5 years. From first year to fifth year, you will find it in the accumulated profit or the retained earnings, no? So kung lugi yan, then the retained earnings will have a debit balance. Kung yan ay kumikita, then the retained earnings will have a credit balance. And of course, the last one is your treasury shares. Now, treasury shares are what? This is actually contra shareholders equity account, meaning we deduct this from the total shareholders equity. And this represents what? The cost of shares of stock that were previously issued but were reacquired by the company for subsequent issuance. No, they don't intend to cancel the shares, but they intend to sell the shares in the future should there be an interested buyer for the shares. Okay, so there. Now, how do we record transactions? Okay, so put muna tayo dito sa contributed capital. Okay, how do we record transaction concerning contributed capital? Okay, let's have an example. Okay, the first example is when the common shares of stock are issued, no, for cash consideration. Okay, so naturalmente kapag ito ay cash, kung magkano yung cash na receive mo, that's the value that you will record the shares of stock. Okay, so therefore we will debit cash for the proceeds, which is 10,000 times 1.2. How much is that? Jane, 10,000 times 120. Magkano yun? Jimboy. Paki-calculate. 10,000 times 120. 1.2 million?
120.
O 130,000? 1.2? 1.2?
Yes, sir.
O si Jimboy garan yan, ha? Pag mali yan, Jimboy, sasabi ko sa'yo pag nireklamo ako, ha? Pagkano? 1.2 million. Then the share capital will be credited up to the extent of the par. So therefore, this is 100 times 10,000. So this is 1 million. And then the excess would be the share premium. So this is the basic entry, no? And for 200,000. So this is the basic entry for the issuance of share capital. Now, what if this is not par value, but rather it's stated value. Stated value of 100. So the share, the common shares doesn't have any par value, but they have a stated value. So in which case, ganun pa rin ang mangyayari, no? We will credit the share capital up to the extent of the stated value. Okay, what if? Third one, what if This is a no par, no stated value shares. No par, no stated value. Now, if this is the case, then the whole consideration will be credited to share capital. So you will not have this premium. You will have 1.2 as part of your share capital. So that is how you record transactions affecting the issuance of shares. Now, what if the consideration is non-cash? Now, if you would recall our discussion on property and equipment when shares of stock were issued for, in consideration for an equipment, then anong ginagawa natin? We value the asset, no, based on the fair value of the asset received. So therefore, for non-cash, you value this based on the fair market value of the asset that you receive. Okay, so let us have an example. Okay, let's have this. So assuming that AEG Corporation issued 10,000 common shares with par value of 100 pesos for a piece of land with fair market value of 1.5. Sabi natin, we have to get the or use the fair market value of the non-cash asset consideration. Okay? So therefore, debit land for how much? 1.5 million. Debit share capital for 1 million. Again, this is based on the par value of the shares, no? So this is 1 million. And then lastly, you have your share premium for 500,000. Okay, so this will be our entry. Now, what if a shareholder purchased two types of share capital, that is the preference and the common? Okay, how are we going to deal with that? Okay, now remember, if in the case of a basket purchase, like in fixed asset for instance, what we did is we allocate the basket price among the assets contained in the transaction or involved in the transaction. Now the same is true with here, with this situation where the shareholder purchases the two types of shares, the common and the preference share. So what we're going to do is we will allocate the basket price, okay, based on the fair market value of the securities that we have issued. What's that? Okay, so assuming that aside from this one, the investor also has preference or also purchase preference shares, so that in 10,000 billion with par value of 100 million. No? Now let us assume that this is the market value. Market value to shares, so market value is 130. Okay, and the lump sum price is, let's say it's so I think 2.5 million. So this is the total consideration, 2.5 million. So we are going to allocate the 2.5 million to the common shares and the preference shares. These are the common. Common is what? 10,000 shares times 120. And then the preference shares is 10,000 shares times 130. So therefore, this is 1,200,000. And this is 1 million. Oops. Challenge 2.5. So allocation would be 1.2 divided by 2.5 and 1.3 divided by 2.5. So essentially the same. Okay, that's 1.2 million and 1.3 million. So therefore, what would your entry debit cash? For 2.5 million. Debit share capital for common. That's 1 million. Share premium. Common. For 200,000. Share capital reference. For how much? 1 million. And then share premium reference for 300,000. Okay, so this would be our entry if two securities were purchased. Oh, sorry. Okay, so this is our entry. Please go. Entry for the purchase of the shares. Okay, purchase of two classes of shares of stock. Okay. Now what else? Let's go to problem number 1. So I'd like you to open your book on page. Again, we're using this one, Intermediate Accounting by Dean Patent Playo and Professor Nito Lopez. Let's go to problem 1. Okay, so we're asked to prepare the journal entries to record the foregoing transactions. I'll be giving you like 2 minutes, no, to read and possibly answer. Okay, let us now answer. Okay, the gallery company is authorized to issue 100,000 shares of 500 par value ordinary share capital. Gallery has the following transactions during the month. So number one, issue 20,000 shares at par receiving cash. So that is 20,000 times 500. That will give you how much? To debit cash. That's 10 million pesos. And then credit your ordinary shares or common shares. Or 10,000 pesos. Okay, number two. Receive a bill amounting to 180,000 for services in securing corporate charter and for other preliminary legal costs of organizing the corporation. The bill was settled by issuing 300,000 shares of ordinary share capital. Okay, so this will be treated as expense, no? Professional fees, and then credit your share capital, and then your share premium. There's any. So magkano po? It's going to be 300 shares times 500. So how much is that? This is 1.5, right? So 1.5 million. So wala pa naman million. Value is 500. And it's 1.5. Number 3. Issue 12,500 ordinary shares in exchange for land and building with fair values. Okay. So again, non-cash consideration. So ang gagawin natin, we have to record the transaction using the fair market value of the assets involved. So you have land, and the fair market value of the land is 5 million pesos. And then you have the building. And the building is for 3 million pesos. And then you have share capital. And this is equivalent to how much? 12,500 times 500. Ikano to? So this is 6,250. So you have a share premium for the difference, 8,000. 1,750. Okay. Number 4, receive cash for 6,500 shares. So number 4, debit cash. This is for 6,500 ordinary shares. It was sold for 550. Therefore, this is 3,575,000 credit share capital for the part. This is also 500 times 300. So this is 3,250. And then share premium. Yes. 3,750. So this is 350. Receive subscription for 20,000 shares at 550 per share, receiving 25% down. So naka-receive sila down, so debit ka ng cash. Meron siya subscriptions, so subscriptions receivable. What else? Meron siya subscribe. Okay, fill it up. And there's one. Share premium. Fill it up. Okay, let us solve. So therefore, the cash is 25%. Right? So magkano yung kayo bibenta through subscription? 20,000 shares multiplied by 550. Sorry, 550 times 20. And this one is the 75%. So this is 2,750,000. $8,220,000. Okay. 10 million. And then the premium is plus 20. Okay. And then the last one. Do the last entry, please. Okay, last one, collected the balance of the subscription price and the 12,000 shares subscribed above. So 20,000 shares were subscribed. Now we're able to collect the balance of 75% for the 12,000 shares. Okay, so what will be our entry? So naka-receive ka ng cash. And the cash is how much? 12,000 shares times 150 times 0.75. That's 4 million. 4 million. And then subscriptions received. Now, since the subscription, the payment for the 12,000 shares were already complete, then we can issue the shares of stock. Then we can subscribe, share capital, and credit now, share capital. Okay, so you complete please. Okay, so therefore this is 6 million pesos. Okay, so that's problem 2-1. Okay. Okay, so what are the things that can happen during the time hawak ng mga shareholders yung kanilang shares of stock. Number one, is there could be a share split. Okay, so ano ibig sabihin ng share split? Kapag share split, okay, binabawi yung number, yung shares of stock that's given to the shareholders, and then they are being replaced, no? Being replaced by either a larger number of units or a number of shares, or a lower number of shares. Now, of course, in a share split, even before and after the split, the total shareholders' equity is still the same. So what will happen is that if there's an increase in the share capital, then in the number of shares that will be issued to the shareholders, then that will cause a decrease in the par value, so that the total will still be the same. Now, same is true if the shares of stock will be replaced by a fewer number of shares, then the par value of the shares will be higher than the previous one. Again, this is because at the end of the share split, the total shareholders' equity is still the same. So the question is, how do you now record share split? If you would notice, there was no change in the share capital or the capital structure of the company. So therefore, when we speak of share split, we only record that through a memorandum entry. Memo entry lang tayo. Sabihin natin, for example, a number of shares were issued in exchange for so much number of shares, the share split affected, no? Then the par value of the shares and the number of shares that were issued for the shares. Okay, so yun lang siya. So dito, we record this by M3. What stock rights? I'm sure you recognize stock rights, no? What is a stock right? So if you take stock rights, these are rights, no, of a shareholder to receive, to subscribe to additional shares should the corporation issue additional shares. Now, and the reason for this is the corporation code protects the rights of the existing shareholders. So before the shares are issued to others, it will have to be offered first to the existing shareholders, so that they have the opportunity to somehow maintain the percentage of ownership they have for the corporation. Kasi for example, you have you own 50%, then the company needs additional investments. Ginawa, nag-increase ng shares of stock, and then binenta sa iba. Ano mangyayari sa iyo? Baka biglang from 50%, maging 10% ka lang. So, what will happen is that you might be voted out, no, as the chairman or president of the board. Okay? So there. So, as far as stock rights is concerned, we accounted for that from the point of view of the investor. No? Now, this time, accounting for the point of view of the issuer of the shares. Now, of the rights. Now, remember, a stock right is just a plain paper. It doesn't have any value unless it is exercised by the share rights holders. No? So what do I mean? Upon issuance of the stock rights, all they have to do is to make a memo entry, no, in the books of accounts stating the number of rights issued to the shareholders and all the stuff. It is when the shareholders actually exercises this right to purchase shares that we will have a recording of the transaction. Okay, so you just record the transaction the usual way. For example, he is entitled to subscribe for 10,000 shares, then he subscribed and paid the 10,000 shares, then just record it, debit cash. Say, for example, 10,000 pesos in credit share capital for 10,000 pesos. That's it. That's for the shares of stock. Now, what if it's a option? Medyo matagal-tagal yung option. So, I'll just see you again, no? I'll see you in my time. Again, thank you very much for watching, and I'll see you in a bit. Okay, bye.